Hello and welcome back to Insta TV. You're watching Daily Financial News with me, Anna Kasatkina. After the US employment data came below expectations on Friday, demand for the US currency remained strong after the weekend. Market participants believe the report is unlikely to change the plans of the Federal Reserve to tighten its monetary policy. They hope that the expected rate hike is still possible in September or later within the current year. However, the relatively calm and predictable trading session might see a change in traders' sentiment. The comments of two officials from the Federal Open Market Committee are likely to induce growth of demand for the US dollar.
The market is impatiently waiting for the speeches of Fisher and Lockhart, who support rising the key interest rate. Moreover, Mr. Fisher has said multiple times that it is necessary to hike the benchmark rate twice this year. If their statements on the necessity to tighten monetary policy turn out to be more hawkish than before, it may be a signal that the Fed will raise the interest rate in September. This will lead the US dollar index to grow to 98.50.
The expected commentary will finally shed light upon the Fed's perception of the recent macroeconomic data, which does not seem to satisfy the markets. For example, even though the annual inflation rate finally managed to cross the positive threshold, in general, consumer price growth remains slow and still lags behind the target. The US Central Bank set the consumer inflation target at 2%. The US inflation is suppressed by lower oil prices as well as the rising national currency. What will the Fed representatives focus on, and how will the markets react to their comments? Learn from the next news releases on InstaForex's TV. Bye.